Hey guys, Crypto here with a new video update. This one is going to be talking about the market as a whole. We're going to cover Bitcoin, we're going to cover a lot of altcoins, and we're going to talk about kind of like where we are in the grand scheme of things. So I'm going to touch on a lot of different factors here. It's not going to be exclusively about any one coin. Before we actually jump into it though, guys, quick announcement here. As some of you know, I've had a MacBook Pro giveaway going on for some weeks now, and we announced a winner a couple of weeks ago. The winner never claimed the MacBook Pro. So as stated in the original post, if the MacBook is not claimed within 7 days, a new winner will be chosen. We gave them some extra time. They still haven't come forward. So we went ahead and chose a new winner for the MacBook Pro. This winner, the user ID is 226135. An email has already been sent to them. Again, same conditions apply. They need to claim the prize within 7 days. And if they don't, we will once again announce another winner. So this will continue on until we give this MacBook Pro away. So if you guys use my ref link for Woo and you're aware of that, please check your user ID here and check your email to see if you won. This is going to again continue until we give this MacBook Pro away. So quick shout out to my partners over at Woo for this giveaway. And again, guys, if you didn't win this time, we do these giveaways quite frequently, not necessarily with MacBook Pros, but we've given away plenty of cash as well. So if you have not won this time, you can always sign up using my ref links to be eligible for future giveaways. Again, all of my ref links will be in the description. So guys, with that out of the way, let's go ahead and jump into the content today. So we'll start off with Bitcoin. As we know, Bitcoin kind of sets the tone for the rest of the market for the most part. So in the last video update, guys, you'll recall that we were looking at a lower time frame impulsive move, and we had local invalidation of that move at 94K. So I'm going to mark this level off with a red line. This was our local invalidation level, and again, the idea was that if this was a low time frame impulse like we've identified many times in the past, then it was possible that we were starting a new impulsive wave to the upside to get some very aggressive expansion. And I said that this scenario was valid as long as 94K was held. Any move below 94K invalidated this impulsive move on the lower time frames and basically made this move a corrective structure, which, as you can see, what followed was a lot of corrective chops. So that looks to be what happened. We hit invalidation. At that point, I wasn't a Bitcoin long, got stopped out of the long, took the loss, and the idea of this current move being impulsive was out of the question. Now, that doesn't mean that we can't see an impulsive move after. It just meant that this particular move was not the start of the next leg, and you can see that we dropped down after that to 90K. So that was the right idea, and we saw more choppy action to the upside, to the downside, and we seem to be getting what really looks like a kind of triangular structure here, okay? And so what this entails is a potential breakout, which we look to be seeing possibly right now. And in the bigger picture, what this could be in the most bullish case, a 5-wave move to the upside. Again, we talked about this in the last video update, with this potentially being the 5th leg up that we were looking for over here, which got invalidated. So if we get another impulsive move to the upside here, not sure how high it'll go, but that'll be a local potential 5th wave. And at that point, guys, we will have completed then a 5-wave move to the upside off of these lows. And again, we've been saying that we need to see a 5-wave move, and up until this point here at 91K-ish, we only had 3 waves up. This is not impulsive, and you can't even really count it like that. Again, I've gone into the nuance of this before, but essentially if you were to count this as being the first wave, despite the fact that it's clearly not impulsive, this wave would be shorter. Your third wave cannot be shorter than your first wave. So this sort of account that some may be doing if they're new to Elliott Wave or new to these ideas, this isn't valid. But what could be valid, and what we've talked about in the past, was this potential impulse off of 58K that we talked about in prior video updates. That could have been the start of the impulsive move. And if that's the case, then we have 1, 2, 3 legs up, and we're still waiting for that 5th to get that final confirmation. So that could be what we're getting right now. It would make sense with this being a 4th wave. 4th waves are often triangles. We're getting a nice strong move to the upside. It's looking pretty good for this to be a 5th wave to the upside. Now, the other key here is that if this is a 5th wave to the upside, what that means is we've now completed 5 waves off of the 59K level or 58K level, and we know that what follows a 5-wave impulsive move, some sort of a corrective structure, right? You can take many shapes and forms, but it's some sort of a choppy corrective structure before the next impulsive move. Again, we don't know how high this smaller 5th wave could go, if it is indeed a 5th wave, if we don't reject here shortly and come down. But even if we do get a 5th wave to the upside here, what's going to follow, in my opinion, is some sort of sideways correction. It doesn't necessarily need to go this deep. We could simply go sideways here and kind of chop above, but I think at the very least I'd be looking for a move back below 85K. I think that's logical and reasonable, and it's not a very deep correction as it is. But the point that I want to kind of drill home here is, irrespective of what Bitcoin does here, because The other alternative option is that let's say we don't make this fifth wave to the upside to complete this structure. Let's say we just barely clear these highs here and then come down to these range lows. Even if we do that, now we have a 1, 2, 3 waves up. This looks even more corrective. And I mentioned in my last video update that if the impulsive movement here is invalidated, then it could open the doors up to move down to 80Ks, and it could open the doors up for something a lot uglier. And all I mean by that is that if we fail to create a fifth wave here to the upside and we're left with just a three-legged corrective structure that then corrects back down inside this range, well, then it opens up doors to a retest of this region, which is very, very significant, which is now the most significant support on the entire chart because it's what separates us from a retest of this potential breakout to a failure to break out, right? So this zone here between 68, you can say, to 73 is the most significant level in the chart right now, especially if we fail to make a fifth wave up here up above 100K and instead we just kind of clear these highs and then come back down. This level becomes all that more important because what that tells us is that this move up was just a three-legged corrective move. And then that sets us up for one of two scenarios, right? The more bullish of which is a retest here, some sideways consolidation, and then the real impulsive move. And that just means that this was one large, what we like to call a running flat. Okay, that's the more bullish scenario if we don't create a fifth impulse here and if we retest the green zone. The alternative is something a little bit uglier, which I know a lot of people still can't imagine this happening, but again, we deal in probabilities and possibilities, not certainties, so I will show you guys this idea. But again, if we fail to hold the green zone, then what could happen is I expect an initial bounce regardless, right? Whether or not we're going to hold this level ultimately, I would be very surprised if we don't initially get some sort of a bounce off of it, because the reality is that this is the best optimal area for longs. If you're looking for an entry, this is the best level to do it down here if we get it. So expect some sort of bounce from buyers stepping in, and then again, the more bullish scenario would be this sort of chop before the actual impulse begins, and that would be a lot more aggressive and violent to the upside than what we saw here. But the other alternative is that if we can't get some momentum going and consolidation and then an aggressive move to the upside, we may see something here, which is what we saw on Bitcoin at 6K, that bouncing ball idea, and we may get a move lower. It doesn't necessarily have to go to 49K, it could simply go below these lows here at 65 and test this cluster of demand at 60 to 64. But in other words, if we lose the green zone, things could get very ugly. And again, we'll get more information about this depending on how this lower time frame move up develops. Okay, now all that being said, and this is kind of the key here, the direction that Bitcoin chooses here, to me at least, and I think to most people, is pretty irrelevant. And the reason I say that is because I talked about this in my last YouTube video update, and we'll go over this again. We'll go over some alt charts to kind of drive the point home, but I talked about this in my last video update, and that is that from current levels to the upside in terms of this particular cycle, or this cycle that, again, zooming out a little bit to keep things in perspective, this being the 5-wave move that started off of 15K back here in 2022, which again is part of a larger 5-wave move that started back here at 3K in 2018. So again, structurally what we're looking at is a massive 5-wave move here that's going to be completed with this final leg. Again, we have 1, 2, 3, 4, 5, and then within that we have 1, 2, 3, 4, 5. Okay, so again, this is the last leg of a much larger cycle, right? So in terms of upside for this cycle and for this move specifically, as I've said for years now, I don't expect anything higher than 300K. And realistically, above 150 at the bare minimum, I'd say, but above that, it's hard to know how close we'll get to 300K. But realistically, we shouldn't get too close to it. So if you keep that in mind in terms of upside for this particular leg, and again, we can better estimate this once we get potential first wave complete, then we'll correct for the second, we'll get the third up, the fourth, and the fifth. And again, that'll look something like this. This is again assuming that our impulse has started, right? Then we'll get a first wave, a second wave, a third wave, a fourth wave, a fifth wave. We can further identify the end of this move once we get the first wave complete, the second wave complete, and the third wave complete, obviously, as price action develops. But the point that I'm making here is that if we're going to end up somewhere between 155 to 300, let's just say 200, just for the sake of making this simple, then that's only a 2x from current levels. And in my last video update, I talked about how most alts are going to vastly outperform Bitcoin from current levels, that the ROI for entering new positions at 100K is very low, unless you have a very clear trade setup and you're an active trader. If you're a spot holder, then we already know, we've said for some time now, you simply hold spot till 100K plus Bitcoin. Even when we were chopping in this range and when I was looking for a move down, I said, if you're a spot holder, you simply hold and wait for higher, because irrespective of whether or not this drop comes, we are going to 100K plus after to complete this final fifth wave. And so as a spot holder, holder, you don't really need to do anything here. This lower time frame pay doesn't really matter to you as a spot holder. But as a trader, and again, that's what I am, so I trade, and I'm sure that's what many of you are here for, this is where it matters, right? Do not feel FOMO about Bitcoin at 100K, because in the best case scenario, you're going to get a 2.5x out of it from here. There's no need to FOMO into Bitcoin at these levels. It makes zero sense to do so, because at this point, if Bitcoin simply continues up, many alts are going to follow, and they're going to do 2x in a matter of hours. Some already have over this last week, and we'll talk about that here in a minute. They're going to do 5x in a matter of days, which again, some have in the last month or so, and we'll talk about that here as well. We'll take a coin like CRV, and I think in the last video we were trading here at 50 cents or something, and I said a move to 80 cents on CRV is equivalent to a move on Bitcoin up to 200K. And I actually made a tweet about that. Let's take a quick look at that. Here's the tweet that I shared that kind of drives some of the point that I'm trying to make. And I basically showed that a move at that time, CRV was at 36 cents. And I said a move to 82 cents from here is 119% gain, which is equivalent to a move on Bitcoin from 97K to $215,000. You can make the same amount of money longing CRV at 36 cents up to 80 cents as you could longing Bitcoin at 97,000 up to 214,000. So this hopefully drives home the point. And guess what, guys? This was made a few weeks ago. CRV was at 36 cents. A move to 82 cents would yield the same ROI as a move on Bitcoin from 97K to 215K. Let's take a look at what CRV did shortly after that and where we are today. We're at $1.12. So already, if you got into CRV at 36 cents from that tweet, and I did share a long setup on Twitter live at the time with an entry here at 26 cents, and we kept that running. And if you did get into that, you've already made the same ROI on CRV in a matter of 2 weeks as you would on Bitcoin at 97K waiting to get to $215,000. So at this stage, it's very simple. The best ROI from this level moving forward is not on Bitcoin, but it's on various altcoins. And that's just a simple fact, at least in terms of this cycle, right? I'm not talking about Bitcoin in future cycles if it's going to 200, 300, 500, 600K. I'm talking about this particular cycle in terms of ROI. At this stage, you shouldn't really care about what Bitcoin is doing aside from keeping it in mind as a gauge of the market context and health in general, right? Of course, if Bitcoin doesn't get this fifth wave here and breaks down to 72K, then you have to be cognizant of the possibility of prolonged chop on Bitcoin, which would actually be good for a lot of alts, or something potentially a little bit uglier, right? And that is where paying attention to Bitcoin here matters. It doesn't matter in terms of positioning on Bitcoin as much because, again, ROI is much better in alts, but it matters in terms of putting your foot on the gas or on the brakes when it comes to buying or trading altcoins. And so with that being said, guys, if Bitcoin climbs higher here, it doesn't really concern me at this point, right? I was in a trade, I'm out of the trade. So at this point, I'm watching simply to see how structure develops. And again, if we get that fifth wave, then we can look potentially at a long dip. Other than that, my focus is primarily on alts. In summary on Bitcoin, we're going to wait to see how price action develops here over the coming days. That may give us more insight into where we're headed in the coming weeks. But for the most part, at this stage, Bitcoin is more just being used as a gauge of our altcoin plays rather than something that we're necessarily actively trying to position. And here's the other great thing, right? Let's say you miss the move from lower up to where we are now, right? As I already said, there's no need to FOMO here, but two things can happen, right? Bitcoin simply continues up, right? We get a fifth wave to the upside, we get maybe a shallow wave too, and then we simply continue up. In that case, the alts that I just showed you are going to go berserk anyways. You're going to make a lot more money on the alts. So you're not going to miss out on upside in the market by not being exposed to Bitcoin at these levels because alts are going to outperform vastly. Now let's take the bearish case. So what if we don't get this? What if we instead come up and then break down? Well, in that case, at 67 to 73, you once again have a pretty, I would say, good area to attempt another Bitcoin trade, right? So at that point, it makes sense to then potentially consider re-entering Bitcoin if you want exposure for whatever reason. This is a place to be doing it. Above here, it doesn't matter because if we keep climbing, alts are going to get you a higher ROI. But below here, if we get down to the optimal, most ideal place to long Bitcoin, then it's worth paying attention once again and potentially entering a position or getting exposure. Or better yet, if we manage to correct below this region and get something deeper, then you have once again a much more reasonable area to be interested in Bitcoin from an investor perspective, because now from current levels to the upside, now instead of just a 2 to 2.5x max, now you have potentially a 3 to 4x possible. So that doubles the ROI from these levels. So point being, at current levels, don't really be FOMOing about Bitcoin. There's no need to. If we get a deeper correction, then you have an opportunity there. And if not, you'll make a lot more money on alts. Now, with that being said, that wraps up the Bitcoin portion of this video. So let's take a look at altcoins. Again, obviously CRV, one of my top picks that I've been talking about for literally years. And I shared this chart on Twitter. Now, a lot of alts are kind of in similar positions here. So I'll give you guys some examples with some coins that I track, and you'll be able to recognize these on other coins. But let's take CRV here, for example, right? Now, I shared this chart on Twitter, and basically I said we've seen manipulation below the range lows here at 26 cents. Again, we entered a public long shared on Twitter at time of entry at 26 cents, and we've been riding that up since, and we're still in it. And again, the target really at the bare minimum is the $7 region up here, right? The prior all-time highs. And this is just a range of the deviation below. We're targeting the highs. But I also shared that we have monthly supply here. And this is where it gets interesting because a lot of charts have these similar areas of interest, right? These key areas of resistance on the way up that may or may not offer resistance, right? So people ask, if I miss that entry at 26 cents, where do I get in on a dip? And the idea is that, again, these are monthly levels. This is a monthly level that preceded our breakdown of the range lows. So it's significant. But the thing is, because it's a monthly level, it's a very high time frame level. And typically what we're looking for at these junctions, these pivots, is a monthly close. So depending on what time frame you're on, if you're on the monthly, you're looking for a monthly close. If you're on a daily time frame, you're looking for a daily close. But ideally, you want to look at the highest time frame where you have a clear order block, as we call them, or a clear pivot candle that preceded a shift in direction. You can see we're grinding up here. We made a high here, and then we pivoted and shifted down. So this is the candle of interest. And typically for confirmation, as we like to call it, you want a monthly candle close above that level. So we want a monthly candle close above 89 cents, right? Now, the thing is, a lot can happen in a month. We have 27 days left in the month. So it's very possible that we see a rejection here and we close the monthly back below. It's also possible that we just keep shooting up. And by the time the monthly closes, we're maybe at $2 or $3. It's not like anything that's like black or white in terms of how we get confirmation here. The higher the time frame for confirmation that you wait for, the more likely a close above is more significant. But it also means that you're being very conservative and you have a chance of missing a big move entirely. So you have to kind of find a balance between waiting for the ideal confirmation and waiting for enough confirmation to allow you to take a position, right? Now, because we entered at 26 cents, we're very comfortable here. We don't need to worry about this, right? If you're already in from 26 cents, you just ride this to the prior all-time highs. It's very simple. If you want to take partial profits, you can do it at $2 to $3. If you're not in from lower, this is where it gets tricky. And this is why I like to buy on the way down. I like to buy when people don't want to touch the coin. I like to buy when no one cares about it, because when things kick off after this long of a correction, they go very quickly. And if you haven't been buying and you're looking to position now about 4 times higher than where we were, it becomes very difficult to kind of pull the trigger, and you start to worry because the risk to reward from current levels is a lot lower than the risk to reward from 26 cents, right? Now, let's say we do reject here at $1.12 and we come down. Now you're underwater, right? Let's say we go back down to 66 cents. Now you're underwater. But the reality is, at the 66 cent level, this could just be a retest or a flip of this monthly supply zone before we just continue back to the upside, right? So now what do you do if you enter in at $1.20 and we come down to 60 cents, you're down 50%, but this is actually the wrong time to be selling because it could very well just be a retest of this support before we go up. It puts you in a tricky situation, right? Now, again, this is for traders. For spot holders, you buy the bottoms, you buy the lows, you DCA down, and you ride this till the end of the cycle. It's very simple. For traders, you have to be more nuanced than that, right? You have to look for ideal entries. You have to look for lower time frame invalidations. All these things come into play. And that all matters because once we get going, it's a lot harder to get a low risk entry necessarily. It may be a lot harder to get a clear entry as we move up with risk managed, right? So again, because of situations like this, we could technically go down 50% and be perfectly fine from current levels. That doesn't allow you to take a clear trade with a stop loss. Well, I mean, in this case, actually, because of how high we're expecting, that's still a really good risk to reward ratio at 10R. That looks like this zoomed out. So, I mean, in this case, a little bit of a unique situation. But the point is that you don't have a very clear invalidation in terms of a stop loss here because you have this really aggressive rise that can technically dip 20, 30, 40% and still be perfectly healthy on the higher time frames. That makes things a little bit challenging. That means you have to go in here with a smaller position size, et cetera, et cetera. So with that being said, guys, the point that I'm making here is that on coins like CRV, the moves are just getting started, right? If you look at this off of log scale, you can see that this move is really just getting started. The ideal place to enter on a retest would be a flip of this monthly level, which is at around 88 cents if we retest it. And again, will we retest it? Will we not? Who knows? But that's what you kind of want to look for on coins like CRV, right? These key levels. And again, this is why I'm making this video, because people ask me, like, are we headed to $2 from here? Can we dip from here? What's a good place to enter if we dip from here? Do we have bullish confirmation? And when people ask if we have confirmation, it's a little bit of a loaded question because you can have confirmation on lower time frames. You can wait for confirmation on higher time frames, as I said. But again, it's all about how aggressive or conservative you want to be in this scenario, right? But anyways, this is CRV. I previously pointed out 36 cents as an area of interest. And with the amount of that we've moved up here, technically, I feel like that's probably not going to happen, but you can't rule it out. And again, even if we do come down to 36 cents off of the move from 18 cents, I know that's a deep retracement, but technically it's still perfectly valid. And at that point, what we're probably just doing is retesting the cluster of consolidation that we deviated below for a triple tap, as we like to call it, which is just another retest of the range lows before acceleration. I don't think that's necessarily going to happen, okay? But I'm just saying that you really can't rule it out, and that's what makes trying to position at these higher levels a little bit tricky. And again, guys, we've seen utility coins at this point pumping like mad. CRV is not the only one that's done about 5x in under a month, right? HBAR, Cardano, XLM, XRP, all of these are pumping like crazy, right? To give you guys some perspective on what we're seeing here, this move from 22 cents to $1.27, which is 6x essentially, took place in about 28 days, in under a month. So we went 6x in under a month, okay? To give you some perspective, and we'll talk about WIF actually a little bit more in this video because I have a nice trade setup that I'm watching. But to give you some perspective, we went up 6x in a month on CRV. The equivalent of that is something that WIF hasn't done since under $1, right? If the WIF high was $4.80, that means that if you got into WIF under 80 cents, your ROI on WIF matches what we just saw in CRV in the last month, okay? If you got into WIF anywhere above $1, the amount of ROI you've seen from WIF, even if you manage to sell the exact top, is still less than what CRV has done in a month, okay? And this isn't to say that CRV is necessarily better than WIF. That's not the point that I'm trying to make. The point that I'm trying to make is that we always see rotations. And I've talked about this plenty of times in my past videos. When I talked about a potential top for meme coins, obviously WIF hasn't ever reclaimed those highs. Coins like Pepe did make higher highs, and we were expecting that to some extent, not as high as we got today. My point is that we are seeing a rotation from coins that have been pumping for almost a year now to coins that have not been pumping. For those that thought that we were in a meme coin super cycle, as it's being called, this should be kind of a wake-up call that utility coins like CRV, and it's not the only one, many have done this, over the last month have gone 5 to 6x, have essentially replicated the gains that WIF made from 80 cents, and WIF has since been chopping in a range, which again I believe is a higher time frame distribution range, but we'll see with time. And so the gains, the money is clearly rotating here, okay? Like I said previously, I don't think that this is the end of memes and they'll have their day again, but I do think that we're seeing, you can call it a local distribution, or you can call it maybe a larger, higher time frame reaccumulation, something like this. And I've talked about this as well. Again, you're not seeing the full price history here on this chart, right? You need to look at WIF on a DEX exchange to see the full price history. This is the full price history. So I believe we've completed a 5-way move to the upside on WIF. We're now seeing a correction. Maybe we're making like a large range here, right? And this could be considered, depending on how you look at it, maybe a large reaccumulation range. You can call it a local distribution top or a larger reaccumulation range. But in any case, it would imply that, you know, it's possible that we see further downside. My point is that we are seeing a rotation here. Possible if it does something like this and then reverses, right? I'm not saying that memes are dead. I'm just saying that we're seeing rotation to utility coins. So if you take a look here at the top 100 coins on CoinMarketCap, aside from Peanut, the squirrel, which has done pretty crazy gains here in the last 30 days, every other token in the top 100 is a utility token, right? Hedera has gone up nearly 600% in the last 30 days. XLM nearly 500% in the last 30 days. Virtual Protocol, whatever that is, up 400%. Curve up 400%. XRP up 400%. IOTA up 400%. Algo up 400%. Sandbox up 350%. This is a clear sign that we're seeing rotation from memes, which have been stagnating for some months now, to utility coins, right? We'll come back to WIF here shortly because I do have a long setup that I'm actually looking to take on it, you know, before I think we're going to see a larger move down. So we'll talk about that here shortly. But the point is that coins like CRV that are seeing monster moves now to the upside. And I made a tweet about this as well. If you manage to get in at 26 cents, then by the time we get to $6, which is prior all-time high, you're already up 30 to 40x. I think we're going higher than $6. That's just the minimum target. But by the time we get to prior all-time highs, you're up 30 to 40x. If we get to $10, for example, you're going to be up 50x, okay? Versus someone who's getting into CRV now at $1. At $1, by the time we get to $6, you're up 6x. By the time we get to $10, you're up 10x. That's 10x if you were to get in now versus 50 to 70x if you would have gotten in at 26 cents. And that's assuming we don't go higher than $10, okay? The point that I'm trying to make is that it pays to be buying when no one wants to buy. It pays to be accumulating at the bottom because the biggest ROI happens off the lows. It doesn't happen on coins that have already pumped up hundreds of percents. Again, to give you some perspective, the move that CRV made from 22 cents to $1, 6x, is the equivalent of Solana going from where it is now to $1,200. Now, I've seen calls for Solana to $1,000, which is fine, whatever. But that's a 5x from here, guys. Whereas on a coin like CRV, within a month, we did 5 to 6x. And again, if CRV goes to $10 plus, you're looking at 60 to 70x. That's the equivalent of a $10,000 SOL. It's not going to happen. We're not going to see $10,000 Solana. Solana has been running, very beautifully so, since January of 2023 to the upside. It's not surprising that we may need to cool off a bit before continuing up. And it's also not surprising that most coins that haven't run are going to outperform the coins that have been running. We're talking about mainly memes, which have been running a lot, Solana, that whole ecosystem, and any other coins that have been really running for the last 6 to 12 months. So whether you believed it before or not, the proof is in what we're seeing now, right? That we're starting to see a shift here. We can look at any token. Let's take a look at HBAR. HBAR went from 4 cents to 37 cents, which is almost a 10x in 1, 2, 3, 4, 5 weeks, in a little over a month. HBAR did a 10x in a little over a month. And that's like Solana going from $23 to where it is today at $230. And I'm only using these comparisons. I don't have anything against Solana. I used to own Solana. I bought it under $3 and I sold a lot of it on the way up. I'm just using that example because it is one of the coins that has already been running for a long time and is a good example of why I'm talking about focusing on the laggards, because the laggards are going to give you the biggest ROI from current levels. And this is a testament to that, right? And this is a chart that I showed a long time ago in one of my videos. I said this is accumulation zone. You buy in this zone, you sell 10x higher. I actually tweeted about that as well. Here's that tweet on HBAR. Basically said that you accumulate in this high time frame accumulation zone between a penny and 8 cents, and you just sell 10 times higher once the next leg up begins, right? If you don't like it, don't buy it. If you like it, this is where you buy and don't worry about anything else. And then you simply sell at least a 10x higher, right? Once you break out. And you can see that what we actually did was pretty much spot on, right? And this happened within a month again. So the run is not over. The run has just started. That's the case for many of these utility tokens that have been beaten down over the last 6 to 12 months. I'm not saying that the run has just started for coins that have been pumping for 6 to 12 months. The run is probably cooling off for those. And it could not be more apparent than what we're seeing in the last couple of weeks. But here's HBAR. And again, we went to 10x. You're already up 10x if you're in from these lows. If we hit $1, at this point, you're up 30x. If we hit $2, you're then up 60x. If you were to buy HBAR now at 35 cents, if we hit $1, you're up 3x. If we hit $2, you're up 6x. And so this also applies to the coins that are currently at highs like Solana at $230. You can buy Solana at $230, but what are you going to get? A 5x if we hit 1,000, if we hit 1,000? Or you can look for coins that have been bottomed out and accumulate at the bottoms before the major pumps to the upside, which is what I've been repeating for years now. I've been echoing that for years because that is where you see the highest ROI, not chasing the coins that have already pumped. And hopefully this makes it clear to those that were previously skeptical of this idea. For HBAR, kind of a similar situation with CRV where we have these key monthly levels. For HBAR, it's right here. And again, we have 27 days till the monthly close. Until we get a monthly close above this monthly block, that's like the highest time frame of confirmation. Once we do that, we're pretty much headed to new all-time highs. But until we do that, we may chop around. We may see a bit of a pullback. I don't necessarily know if we'll see a pullback as low as 18 cents, which is this local swing high, key level that we like to look at for pullbacks. So let's say we're flipping this monthly block to support, right? And we're retesting it intra-month. Then this would be a logical retest level here at 27 cents. We already hit 38 cents. So this is still actually a decent 30% pullback, which again is healthy and normal, right? So we very well could just be retesting this monthly block in green before heading higher, right? So this is a place where as a spot buyer, you may look to get potential exposure. And again, this all assumes that Bitcoin's not going to see some massive breakdown, right? Like if Bitcoin breaks down to under 72K, then there's a decent chance that these levels won't hold unless we climb a lot higher before that happens, right? So if Bitcoin just melts down in the coming days, just barely eclipses our last local highs, like I talked about earlier in the video, and then comes down to 72K, like a dead cat bounce and continues to melt down, then maybe something like HBAR loses, right? Doesn't actually confirm this monthly level as support, and we actually close the monthly back below it, in essence means that we got a rejection. So like, let's say we close this monthly candle underneath 19 cents, for example, then that would indicate this is a rejection, which is why these higher time frames, confirmation is like relative to how aggressive or conservative you want to be. If you want to wait for the utmost confirmation, you wait for the monthly close, but you risk us just pumping off of this on a retest and continuing higher. At the same time, if you jump in before the monthly close, you risk us actually rejecting here by the end of the monthly close and closing below. So there's a lot of nuance there when it comes to trading, but my point is that if we do reject here and close the monthly in 27 days under 19 cents, then this just looks like a big rejection, right? And then we look at the lower levels that come back into play. And we won't know that because we have 27 days until we see how price action reacts on these lower timeframes. If instead we start holding this monthly zone as support, right, and we see positive signs of absorption or buyers stepping in here, then we could just be retesting it before we continue higher. We'll also take a look at XRP. Out of all these alts that I'm looking at, XRP is the only coin where we have very, very, very clearly impulsive subdivided price action. Now you can see here on XRP, and I pointed this out as we were climbing in my tweets as well, but we have lower time frame impulsive price action. Once again, we see the 1, 2, 3, 4, 5 of the first subwave. Then we got these nested 1, 2, 3, 4s with smaller subdivisions in between, a nice corrective 4, and then a very clearly impulsive fifth subwave here, right? And I pointed this out on Twitter as well. We have a 1, 2, 3, you have a triangle, 4, and a 5. And then we got this sideways chop, and now we look to have another potential impulse to the upside, right? What this means is we've now confirmed that we have a completed 5-wave impulse off of 49 cents, which means that XRP, we're not sure how low it'll go in this correction. Correction could already be over. We could be going, significantly lower to retest maybe the $1.40, $1.50 zone. But if this is a new 5-wave impulse off of 126, then we shouldn't go below 126, right? And we should see something like that. Again, I don't know how long the correction will last. This isn't drawn to scale for time, and I don't know how deep this correction will go, but there's a chance that we're not going to go below 127 at this point because we have another potential 5-wave move here after completing a full 5 waves off of this low. So the chance we won't see sub 128, but we definitely should not see anywhere close to sub 50 again. And now we've started a new 5-wave move to the upside on XRP, for example. Point being that a lot of these alts that people kind of wrote off as dead are now seeing massive moves to the upside. And at the same time, depending on what we get in the coming days, we may get a sharper pullback on Bitcoin that could give us good entries on alts, right? There's still a lot of opportunity to go here, guys. At the end of the day, Bitcoin is headed, in my opinion, above 150K. Whether that happens now, whether that happens later, we'll have to wait and see. But the opportunity right now, mainly, irrespective of what Bitcoin does, is on alts at this time. Unless Bitcoin does make a move back down to the green zone here or potentially lower, that's where it makes sense to focus a little bit more on Bitcoin again. Until then, alts are in the driver's seat for now. Quickly, let's go back to WIF because I want to talk about this lower time frame trade setup that I'm saying that looks really clean. Zooming out a little bit more, previously, as some of you may recall, I was interested in shorting WIF above this local high. Actually, well, I shorted it on this little wick above, and then I closed the short somewhere down here, and I said I'll look to reshort above this level as long as the confluence I was looking for on the Bitcoin pairing. I did not end up taking the short. I tweeted when we were here that we don't have the confluence I was looking for or the right context, so I'm not going to take the short. We then moved up back to prior highs, and now we've come back down to essentially retest this range high. We have this little blue range and we have this larger black range. And you can see we have these built up lows that keep getting built up. We have this green zone, which is massive area of demand. This is the line in the sand for bulls and bears. Above this green zone, we're bullish. Below this green zone, we're bearish down to $1. Above this green zone, we're bullish up to prior all-time highs. We have kind of equal highs here, which often get swept. So the logical thing is that now that we have gotten above the range highs and we have not seen a rejection, instead we seem to be seeing some absorption at the range highs and kind of us basing out. The logical thing is to expect the green zone to hold on its first test, a move up to range highs to take these equal highs, and then potentially at that point we will then have another set of built up lows, just like these ones here. Then we watch for a potential rejection here, deviation, re-entry into the range, and then a larger move down. Now again, I'm a trader, so I'm simply trading this, which means I'm interested in longing WIF into the green zone, and I'm interested in taking profits at the highs, then looking for potential shorts. Again, I trade both ways, so this is simply a trade setup that I'm looking at, but this is kind of how I interpret the chart. For those of you who are actively trading and want to understand the way that I look at these things, this is kind of what I'm looking at here on WIF. So I think that these memes could have some more upside, but again, in the grand scheme of things, if you consider this our range highs, this could just be a larger local distribution range at the highs before the larger move down, which is all, again, part of either a larger reaccumulation or a local distribution before continuation higher, potentially, right? So that's the way that you need to look at these things. So let's take a look at Link. Link is one that I unfortunately did not get a chance to enter at $8. This was my area for a bounce. You'll recall that when we were trading here at around $15, I said I shorted Link publicly, took profits on the short, but it's calling for a move down to $8. Many people said it was impossible. We got the move down to $8. This then became one of the cleanest looking higher time frame charts in the space right now, because as you can see, we have a massive range. We have about from May 2022 to September 2023. That's over a year of accumulation at the range lows. This is basically a large deviation. Then we have a reclaim of the range, a retest of the range lows, and again, continuation of the upside. So this is one of the most bullish charts in the space right now, frankly speaking, because we have essentially what is from 2020 to today, that's a 4-year accumulation zone, basically. And we look to be on a way to break out. Now, again, I'm interested in buying Link on any dips because of this. And I'm hoping that we'll get a retest of this monthly demand down to this region here. This is a smaller range that I've marked off, and you can see that we put in the highs here, put in the lows here, deviated below. We now cleared the highs. If Bitcoin gets some sort of a larger pullback, then we can hope that we get a retest of monthly demand. I don't know if we're going to get it, but that's where I'm interested in on Link. And then we're looking for a move to the range highs here at $50 plus. I think this is going to cover this video, guys. There's a lot that I want to talk about, but I kind of wanted to get you guys a general overview of where we're at in the market, and I think that this should have done it for you guys. Of course, there's many alts at different stages of their own market cycles. As I've talked about, some alts have been running for 6 to 12 months, some are just beginning to run. So you want to focus on the ones where they have the most potential upside from current levels, not the ones that have been running for 6 to 12 months, because those may be cooling off at this time. Of course, they can go higher, but ROI when something has already run 10, 20x is a lot lower than something that has barely run 2 or 3x off of its macro lows. Other than that, guys, I hope you guys enjoyed the video. If you did, please like, share, and subscribe, and I'll catch you guys in the next one.